All right, let's see. All right, good morning, guys. Today is Thursday, February 22nd, and as usual, doing analysis for US 30, gold, and EU. So looking here at US 30, daily bias is bearish. Gold daily bias bearish. EU daily bias bearish. We couldn't close above this daily bullish SAR yesterday. And gold daily bias bullish. You can see gold also formed this daily sell SAR. However, price looks like it's coming back above the bullish SAR level. So looking what we have here for US 30, we really don't have any SAR zones based off of where price is. But if we turn on the zones indicator, I'm sorry, yes, the zones indicator, you can see we are in a supply region. And also we have a 4-hour bearish high here. So US 30 just tapped the 4-hour bearish high. And we also have a supply zone here. So let me just mark this as well. So we do this, we mark this as 4-hour bearish high. Then this right here is strong supply zone. So what I would want to see in this zone, I would possibly want to see something of this sort. So in here, you'd expect them to manipulate price up. So I'd want to see something of this kind, pick up liquidity here and come back this way. So that's what I would want to see for US 30. So that's the pattern I look for, but we don't have any SAR zones around where price is right now. I'll just mark some of these other zones that it created on the way up. And then on the 30-minute, nothing as well there. For gold, gold has been dipping heavily. So if you guys remember, I think it was from the live session, either from Tuesday or from last week, like Thursday. So if we turn on the markups indicator, we had that for, if you guys remember, the 2035 region that I've been talking about, just a second, the 2035 region in gold that I've been talking about this whole time. If I turn on the markups indicator, it should load. That's where gold exactly went to that region. Look at that, this 4-hour bearish order block, right? So this is the same thing we're expecting with US 30 here. We have the 4-hour bearish high here, but gold picked up liquidity from this 4-hour bearish high and melted to the downside, and now it's triggering that daily bearish low. So looking at what we have for gold currently, uh, this is not a break and continuation, so we really don't have any entry for gold just as of yet. This should be, yeah, that should be that. Yeah, we don't have any entry for gold on the 15-minute time frame. No momentum entry for gold on the 15-minute time frame. On the 30-minute time frame, no gold entry so far that I can see. EU, same thing. EU yesterday, if you guys remember, I talked about a sell zone around 1.0298, 1.08298, but I said it was kind of risky because of this daily bias, right? The bullish SAR that was forming, and you can see how they manipulated price up. But even for today, here there might be a break and continuation entry on EU, but this is looking at where EU has dropped from. I don't think I would be inclined to take a sell down here just as of yet. Maybe wait for a retracement up and maybe catch a momentum entry, but we do have a 15-minute entry lining up here. But we'll see how that closes. But I don't think I'll be taking that, especially since Mostly because EU moves a little too slow for my liking. Here on the 1 hour time frame, nothing for US 30, nothing for gold based off of where it is right now. This is a double SAR region right here for gold. I think this other one is a double SAR as well. So currently no no zone around where price is at 2024.04. This is too big of a zone. So there's a small zone right here. So on the hourly time frame, no setups currently. For gold and US 30. For EU, no hourly setups. There is not a break and continuation. Go ahead and redo this zone here. Yeah, no hourly entry as well. For gold and EU based off of where price is. On the 4 hour time frame, I think I checked this morning. There was no 4 hour entries for this instruments. 2031.0 to no. Yeah, on the 4 hour, there was nothing. So today, probably this US 30 trade is what we'll try to catch, but we need this 4 hour bearish high to be mitigated first. So right now, I do expect a continuation for US 30, a spike up in liquidity to probably stop hunt people that are trying to catch the sell. And then here, I would be looking to catch the sell on the way back down. So it's similar to what we did when we had the 4 hour bearish order block. I think it was maybe Friday or something. So we need US 30 to go up, pick up liquidity first, because remember, if we're turning, so we don't have any SAR entries for today, but if we turn on the zones indicator, you can see this heavy selling area right here. So we want them to go up, stop hunt people, pick up that liquidity, and then come back down. Because here, even though you were to take the sell on impulse, yes, you can still take the sell on impulse. However, most of the times they go ahead and manipulate price to the upside first before coming back down. And you can see your stop loss would ideally be above that zone, above that supply zone. So this right here around this area, once we start getting like maybe lower lows on the 5 minute, this may be the best area to sell US 30. But for right now, it's more of a waiting game. And the other thing, the other part is what are the other strategies we have? Let me look at something. Breakout strategy. Yeah, there's no breakout really. The other strategies are the momentum strategy. So momentum strategy, no momentum, no valid momentum entry on US 30 for the hourly, no valid momentum sell on the hourly as well. 4 hour time frame for US 30, nothing there as well. For gold, no valid momentum buy, no valid momentum sell. That's currently where price is at on the 4 hour. And on the 1 hour, this is not a valid momentum buy, no valid momentum sell as well. And then EU, if we do get like a nice momentum buy on EU, that would be a nice one. No valid momentum buy on the hourly, no valid momentum sell on the hourly as well. Yeah, so this region, this 298 region, this is what I was telling you guys about. But if you guys remember, I said since we had that price was going above that bullish SAR, you would expect like this large spike. So this is why also yesterday I said I wasn't inclined to take that EU trade because this one would have gotten just stopped out for no reason, especially due to that red flag. Um, and the other one is that's the hourly time frame. When we go to the 4 hour, and you can see how the US dollar is pumping up, right? So if you can look at here, the US dollar is becoming pretty bullish. So that's why gold is dropping. That's why EU is dropping, and I'm hoping US 30 ideally should be dropping. And another part, if you look at where US 30 is on the daily time frame, it's being held down by that daily buy SAR. So remember, as much as it shows as a daily buy SAR, it doesn't mean that price would need to close above it. If you look here for EU and you look at this zone, price did not close above this daily buy SARs, because remember, SAR stands for stop and reverse. So when price hit here for EU, it reversed again back to the downside. So that's what I saw this pattern last year on US 30. I forget what day it was. We had, I think it was towards the end. Yes, this one right here. So if you can see, this is what I'm hoping US 30 does. So you can see here when it formed this daily buy SAR on the daily on August 10th, it rejected heavily down. And then from there, US 30 started melting to the downside. So that's exactly what I'm hoping, or I'm anticipating US 30 to do the same move, because you can see it had done pretty much what it's doing now. Done a bullish SAR, come down, then went bullish, and then consolidated for a while, made that daily sell SAR, and then came back up, made the daily bullish SAR, but did not close above it. And from then on, US 30 just melted heavily down. So that's what I am anticipating to happen, or I would like to see happen with US 30 over the next month or two. Yeah, so exactly this, pretty much the same thing it did last year in August. So that's what I would hope to happen to US 30. But for me to take this trade, I need this pattern to line up. If not, we do have a sell. So this is not a SAR zone. This is just a supply zone. But this one right here, down here, this is an SAR zone. So we can still get like a sell entry around 38,780. But I would rather sell it from this top here as opposed from selling it here. Because if you sell it here and they really haven't tapped into, the key thing is to make sure that they tap into this supply zone right there. If I can delete it there, you'll still see, and this is heavy. You can see it's pretty red, right? So this is a major supply zone on US 30. Trying to mark that up. So right now it's just a matter of waiting for this particular zone to get tapped. And once we do get that, then I'll be taking the entry. So yesterday we didn't have any trades. Yesterday, no trades. So it's better to not trade than just force any trade. And also yesterday on US 30, if you guys remember when we talked in the live session, we did have, if you guys remember this zones, right? Because we wanted at the very first time, I think this was on the 30. This is where we wanted to take the sell on US 30 during the live session, but these candles did not really tap our zones just as of yet. And what happened later on during the day, I think this was after FOMC was released, price came up and tapped those zones, those supply zones within supply zones, right? This darker red zones in here, exactly to those zones, and then melted down heavily, and then before the pump up later on during the night. So this is the same thing I'm anticipating to happen. And since I've seen that pattern, there's no need to feel like to feel FOMO or whatnot. You just have to wait for price to come to you. So we'll just wait for that to happen. And looks like today this is going to be my only trade. I was hoping gold would come back up to that 2035 region or 2039. So remember, for gold, we still have a daily bearish order block, daily bearish high at 20. So zones indicator, right? We have nothing but sellers here on gold. And that's why I'd said 2035 was a perfect selling area on gold, because we had 4-hour bearish high, and also we had sellers sitting there. So same thing, right? And I'll probably start doing stop orders going forward. But for the daily bearish high is at 2039, 2038 region. We have a bunch of sellers sitting here. So I do expect gold to come back at some point to 2039, 2040 area, pick up that liquidity, maybe even go to 2044 to for a stop hunt before reversing now back down from 2044, 2042 region. So that's a critical area on gold that you guys can set either pending orders or set an alert so that when price gets to 2040 or 2044 region, you go ahead and see what's happening. So here, let's just wait and see this move on US 30. Here, I can expect like a big spike up. So once we get that big spike up, then we go down to the 5 minute time frame and start looking for lower lows to be formed, and then we take the sell on US 30. If anybody has any questions, feel free to ask. Today's session might be a short one because US 30 is the only possible entry for today. Yeah, because we don't have any, unless gold, I don't think gold is gonna come to 2040 during the live session, but yeah, EU gold, no entry as well. Give me 1 second. Let me think something through. Let's turn on the markups indicators here real quick. We have a 4-hour bearish order block. Let's see what zones we have here for EU. No. Let's see if we do anticipate gold to come back up to 2040 region, I would want to see a nice high time frame order block. So gold is coming off of a demand zone. So you can see we have buyers sitting here. Let's turn on our markups. So 4-hour. So gold might come 2021, 2018 might be a nice reversal point for gold. Let's see what happens when gold reaches this 4-hour bullish high. If it does reach there, because personally, I do anticipate gold to go back up to 2039, 2040. But if we were to catch that buy, and there goes US 30, right? Exactly. That's what I told you guys right there. So this is what we want to see, but no need to rush into selling or anything just yet. So let's wait for them to stop hunt people. So we have 3,900, right? So we have a psychological number here, 39,000. So let's watch that 39,000 probably get taken out. And then we want to catch this right back down. Where was I? I was looking at gold. Gold, maybe 20. Let's see. Let's wait for gold at like 2021, 2018 region. But you can see we have nothing but demand zones, supply and demand. So gold just picked up liquidity from a demand zone. And US 30 here, I think it's heading for I think it's past, it went to the all-time high and came back down from there. So here you have a decision to make. Personally, I would rather wait for this pattern to play out. Here you can catch some quick pips, right? So if you're a scalper and you go for like 10 pips or 10 points, you can definitely catch some entries there. But personally, this is what I'm waiting for. So I would rather this gets taken. So if we turn on the zones, because if US 30 breaks here, then there's nothing, because this is the all-time high. So if US 30 breaks here, then probably going to 39,000. That's the next psychological level. And let me line it up here. 39,000. And mark this up as a psychological level. Now, as much as it's a psychological level, of course, the smart money or market makers know that. Then normally they would pump it up to maybe 100 points above, 100, I would say 200 points above the psychological level. So if it does break that area, then 39,000, they can bring it all the way to 39,200 before any reversal. But this is what we want to see right there. Right there. All right. And then let me turn off that zones for now. So definitely looking at everything. EU is fully bearish on 15-minute, 30-minute. Gold fully bearish on 15-minute, 30-minute. US 30 is fully wait. Gold and EU, I'm sorry, EU and gold are fully bearish. US 30 is fully bullish on 15-minute and 30-minute time frames. Um, Also, there is a possibility those people might, because I'm still in those small lot sells on US 30, they might stop me out because I have like a 3% stop. Um, and I've been holding those trades for like a month. It's if you look at US 30 here, like there's definitely that selling pressure coming in, but they're just rescuing it every time it drops heavily. They just have some sort of rescue because historically you expect, or I normally expect US 30 to drop from the last week of January or first week of February, but they've just been saving this asset like almost every time it drops down. But I'm hoping I don't get stopped out on those small lot trades. Um, let's see. So we already have this. So we need this pattern to play out for me to take this entry. So at this point, we are coming, so they're picking up supply, right? So they're picking up that supply. Now, what we need here, we need to start seeing on the 5-minute time frame, we need to start seeing lower highs being created and lower lows. So just being a little bit more patient. But you can definitely take, right? You don't have to take every trade I take, but if you guys have any setup that aligns with where US 30 is, you can definitely take sales. The only issue is that we are in a critical area that allows for a lot of manipulation. Uh, So this is the new all-time high right there. Let's just mark that up. So nothing yet on the 5-minute. 5-minute time frame. We need to start seeing the lower highs and lower lows being created. So this keeps getting higher and higher. I am adding this. That's just my small lot account. I'm trying to add like some small, but yeah, that account, because my drawdown is like, or my stop is like at 3%. I'm like in minus 2.7% drawdown. I need this to come back down. But if it comes back down, all I'll do is so for the small lot strategy, the small lot strategy is based off of right historical data. So this is based off of the last 10 years of US 30. So two things I've observed. The first week of January, no, the last week of January to or the second week of February, US 30 historically, if you look even for last year, US 30 historically has this move to the downside. Now, this year they've just been saving it too much because this year you can see first week of January through no, last week of January through even February, it's been on an uptrend. So maybe this is one of those years US 30 is just on an upward trajectory. So the next time I'll do my small lot strategy will be towards the end of the year, because the other thing you normally expect towards the end of the year, like in October, I think what July, August to October, you normally expect this spike up for US 30. So that happened last year. Same thing happened the year before. And I think also the year before, somewhere in October, we had that pump to the upside. Same year that happened the year before, November. So the next time I'll use the small lot strategy. If I get stopped out this time, I'm not gonna keep doing the small lot sales anymore for right now. I'll just start manually trading with the no, big lot sizes I normally do during the live session. And then towards October or November of this year, that's when maybe I'll try or I'll come back to catch the buy for US 30. So you normally expect US 30 to start with a dip in the beginning of the year and then end the year with like I think it's called like a Santa Claus rally. But looks like this year, they might just keep going up. So I'm hoping they don't get to this psychological level just as of yet, because if they get to 39,000, they'll probably pump this thing up all the way to like 39,250. And even for me at this point, mostly I'm just trying not to get stocked out on the small lot account, but I'm still waiting for this official trade right here. So here we need to start seeing the lower lows on the 5 minute. So we still don't have that lower low on the 5 minute. We need to start seeing candles forming lower lows and lower highs on the 5 minute time frame. And it should ideally be following through. And I think yesterday we had yesterday we had FOMC, and I think we had some earnings being released. So I think that's what also contributed to the upward trajectory, that strong recovery of US 30 yesterday. Yeah, because this one definitely here was during FOMC release. And then during afterwards, I think this was during earnings, like at 3:30 or maybe 4 or something. All right. So this is the 15-minute time frame. So even on the 15-minute time frame, so if I start getting lower highs on the 15-minute time frame, I will know that we're getting lower highs on the 5-minute time frame. So here, this is mostly a liquidity grab, which is one reason why I did not want to sell exactly at the 4-hour bearish high, because if we had sold here, you see automatic stop hunt. So you don't want to sell in these regions, in regions where they can spike price up to stop hunt people. You don't want to sell around those regions. You want them to go past those regions. And best case scenario, now you want to start waiting for those lower highs and lower lows to be created. No. Gold still falling. And for the news events for today, we had the 8:30 unemployment claims, 9:45. Okay, so we already had the 9:45 news. The 10 a.m. news just came out. Okay, perfect. So let's see what we get here. We need this US dollar to keep pumping. Let's go to the 5-minute time frame. So 5-minute time frame possible. Lower highs are starting to get created, but we need this. We need a nice downtrend. See, nothing for gold. Gold has a test and rejection. No, that's a test and rejection, but the candle is too far down. Same thing with EU. Mm, Um, and the high-low indicator on. Um, let's wait for a higher high to be established here. A higher high to be established on the 5-minute or even on the 1-minute. Let's see. Higher high on the 1-minute. Higher high on the 1-minute. I would want to also see the 1-minute candles, so the trend changing to a red candle. So I want to also start. So this is how we can start seeing from a lower time frame. So on the lower time frame, we need red candles to start developing because that will show the trend starting to shift to bearish. Because I don't want to get in too late and I don't want to get in too early. So like a higher high and then maybe a lower, either I guess it's a lower. Yeah, higher high and lower high on the 1-minute. If those are created, then we can know that structure might be changing on the 1-minute time frame. Oh, I'm sorry, on the 5-minute time frame. I sure hope that was the high of the first half of the year, because that would be nice. Okay, perfect. So we have a red candle, so meaning that the trend is changing. So these are trend indicator. Trend is changing to bearish on the 1-minute. So now let's move on to the 5-minute. 5-minute, we want the same thing. We want to start seeing the same thing. Perfect. So we are seeing possible lower highs being created, but we're still not out of the woods yet. So we're coming into that supply zone. So this is what we are looking for right here. Ideally, I would want a candle closing below here. Candle closing below here. But these candles are moving so fast. Let me see how I want to do this. These candles are pretty huge for the stop loss. Um, so 4 hour bearish high is there. This is the supply zone. Let's see where this 5 minute candle closes. So I'm not in the trade yet, watching to see where this 5 minute candle closes. If this 5 minute candle closes inside this supply zone, I will be taking a sell for US30. For you guys, it should be risking 0.75%. I'll be, of course, risking 1% per trade or for my trade. But we need this 5 minute candle to close inside this supply zone because that's where the sellers are sitting. So either inside, I would rather it close inside rather than below, because even below, you can see these candles are so huge, right? This, like, one candle is ideally can take you out like in a loss like real fast. So we have a lot of liquidity in the market. So we can either get taken out real fast or go to TP real fast. But of course, we would be anticipating going to TP real fast. And of course, you can see our markup is playing out, right? So the markup that I drew, and I would definitely say this is more of a riskier trade. Best to maybe wait, um, maybe for when price breaks down here, or to wait for any possible manipulation back down to the upside. But I think they already almost hit that psychological level. So in 58 seconds, um, let me think that I would want my stop loss to be up there. It's perfect. I want it to come back. We don't want to close above here. Uh, come on. So waiting, still not in. So we need this 5 minute candle to close. 20 seconds. I don't want it to keep going. Mm. If it closes below, I'm not gonna take it. I will wait for it to come back up here. Ah, this is still, yeah, that's still too huge of a candle. I'm not taking. I'll take it if it comes back here to the high of that supply zone right there. Because so think of it as a break and retest, right? So if it broke this supply zone, it would be retesting it more than likely. But again, right, you don't have to take everything. I'm still sure that US30 is going to drop, but right, one thing I'm being cautious is these candles are too huge, and I am trying not to get stop hunted. So I would wait. Personally, I'll wait for it to come back into this zone, and then take it from there. If it doesn't, then it doesn't. If it doesn't, I would be looking to take a sell later on based off of maybe an SAR. But think of it this way, and this is why I've turned on the high-low indicator. So this higher high, if this is the high of this current trend, this higher high has not been established yet, right? Because you can see we have lower highs, high lows. So if we are to continue getting those high lows and lower highs, price would of course be in a zigzag, right? So it doesn't mean that price will automatically melt down from here. We still need this to get established as a higher high. And if we're expecting lower highs to be created, right, it would be like something of a trend line. So either way, you're still going to get a trade based off of maybe such a trend line like this. So if we're expecting this to be established as a higher high, which it will probably be established after 5 candles, I think the setting is after 5 candles. So that would be established as a higher high. And then if you're expecting lower highs to be created, then on the retest of the trend line, you would get that lower high, which would be another opportunity to sell in the same supply zone. So there's no need to try and rush or catch anything, especially if you do feel that maybe some confluences are missing. So for me, I'm still not in the trade yet, but definitely looking to take the sell in this supply zone here. The other one that can be a trade is this one. So this would be, so this is similar to the one, what was it? Was it it was a US 31, right? This would be a break and continuation of, it's not a double SAR, but break and continuation of this order block for our bearish high. So this is another possible trade as well here for US 30 right here. Because this 5-minute candle broke and closed below that 4-hour bearish high. And then this candle is continuing there. So let's see how this, so this is another one too. I would be, um, I would be looking to take as well, because this is similar to the US 30 trade we took, I think, on Tuesday or whatnot. Yeah, the one we took on Tuesday. So we just need to be just a little bit more patient. And even on the 15-minute as well. So 15-minute, so this 15-minute candle, so if the 5-minute candle closes below this supply zone, it would mean the 15-minute is also closing below that supply zone, right? So remember, this is a strong supply zone. So here, and both of them will close at the same time. So yeah, so this would be a trade I would be inclined to take. So let's see how that one goes as well. And we don't want it going too far down. We just want it closing around this zone. Come on, back up. If you can adjust your stop loss to be above the previous higher high, or to be above the previous high, which is the all-time high. Let's see. Give me 1 second. We don't want it closing too far down. Remember, we want our stop loss to be protected by this strong supply zone. So I'm not taking this. I will take it when it comes in here. So same thing with the SAR, right? You want, if this is your supply zone, you want your trade to be protected, because if you're in this trade, look where your stop loss is. Your stop loss is within that strong supply zone. And if I turn on the zones indicator again, you'll see the zone. I would have to refresh this. Oh, it's because it's on the 5-minute time frame. So I'm not in the trade waiting for price to go back in there. If I turn on the zones indicator, I think they already mitigated it. Yeah, that's why it disappeared. Uh, um, no, it does show up on the 30-minute. No, there's another one. So they mitigated that, but it's still a valid. So they already picked up that supply. So here, it did close below. So if you're in that trade, you want your stop loss to be protected by that strong supply zone in there. So wait for price to go back up into that zone. So still not in. So again, right, this is the same one, the same pattern we drew, right? So price has already gone up. So we know that already happened. Price has already come down. We know that will happen. So what are we trying to catch? We're trying to catch this leg right here. So you can see this leg is telling us that after price breaks down below here, price would come back to the supply zone as well as a retest, and then have a possible melt back down to the downside. So this right here, this supply zone is pretty huge. It's like 30 points. And these candles are moving like 30 to 50 points. So my stop loss is 50 points. So you can see why I'm also being a little cautious as well. But what we're expecting now is this move back down here. No, I'm sorry, this move back up into supply to confirm, and then possibly get a spike back down to where we expect. So just wait, just hold off on it. And we definitely want that higher high to be established as well. All right, just wait for them. I want them to push price up just a little more, just a little more. And I can see we also have a fair value gap between these candles right here. So I want them to push price up. Mm, This is a tricky one. All right. So remember when I was telling you guys about like how you can be doing EA trading with me on the live session? Because right now, if you'd have done like sales, which would of course be with a lower risk than you're doing, you would be up in profit right there. And I know I did say I would be doing that as well. Like since we know, or I know, or I expect US 30 to go down, I would have just been accumulating sales for the next 3 hours, and then after 3 hours, um, you just close whatever profit you have, or if you're in a loss, you just close the loss and you wait for the next day. We still don't have that. So long as we don't have that higher high yet, so I'm still not too worried that price is sinking. Because if we do get that higher high right here, and we're in a downtrend, at some point we'll get a lower high, and that lower high will almost likely be in this zone right here. So we still need to watch for that higher high to be established at the top there. Okay, so there goes that higher high, right? So you can see we've already established the higher high here. So if we're in a downtrend and we expect the downtrend to continue, after a higher high comes what? Lower high, I believe. So if we are to get a lower high, what is the current trend? The current trend would be something of this sort. So that would be a trend line. So meaning at some point, if this trend is to be if this trend is to be sustained, and I'll delete these markups, but if this trend is to be sustained, at some point, we'll get a retest on this trend line to create that lower high. So this is perfect for everything that's going on. So at least we know we have that higher high right there. So we can get that lower high any point during this supply zone in here or around this 4-hour bearish order block. So we just need to wait for price to retrace back up. It might not retrace now. We can have like a steep drop, and then we have like a lower high even below here. But for me, I would want that lower high to be created inside this strong supply zone that we identified here. So remember, today we don't have any SARs for US 30 based off of where price is. The SARs are these red zones that are down here. But this zone that's up here, this is ideally that strong supply zone. For gold, we have this was a test and rejection entry right here. Price, this was overextended. So entry validated down here, but it was overextended. I wouldn't have taken it because the SAR level we are trading is up here. So that's not even a trade I would have taken. We have a current possible test and rejection forming. Oh, what was the zone I told you guys for gold? Um, uh, Zones indicators. So, oh, I think we missed that. Yeah, this 4-hour bullish high. Because remember, we expect gold to go back up to 2040. So that goes that 4-hour bullish high that I was looking at before the live session started. So this would have been in profit already. Uh, um, Anyway, it is what it is. For me, the big one I want to catch is that US 31. Okay, so there goes that retracement to the upside. So this retracement would be to create that lower high. Mm, 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 mm. All right. We have liquidity dying down. Not sure if we're gonna get that spike up. Let's see for the 15 minute. Let's see 15 minutes, slightly bullish for US 30 minute fully bullish. Gold is just bearish and bearish on the 15 and 30. Same thing as EU. Um, mm, mm. We need this leg to play out, and hopefully we get that during the live session. Oh, gold is gone. She is gone. Probably that 2018 area to this 4 hour bullish low. 2018, 2016, 2014. Ish. Man. Mm, mm, mm. Mm. What time is it? 10:20, 10:30. Um, yeah, I think I'll call it a day for the live session. Let me review some because this looks like liquidity has died in the market, but ideally what I'm looking for is this pattern. I'm looking for price to come back here and give us that possible lower high. So, and hopefully that would be on this trend line. So wherever this trend line is headed, so maybe around 38,000. So I would say 38,923, like around that area. That might be a nice area. So let me see if we get that in the next 15 or so minutes. Because if not, you can see liquidity has started to die down, and there might be really no need of hanging around just as of yet. For the other things, I really don't see anything. On the hourly time frame for gold, this was a test and rejection on the, I'm sorry, this is the 4 hour time frame. On the hourly time frame, there's really nothing. Nothing on gold, nothing on US 30, nothing on EU as well. So yeah, this is probably the only trade because there's no 15-minute and 30-minute entries. There is a EU, so this is an EU break and continuation setup. However, EU is too has come down so much in the last 2 hours for me even to take this. But if anybody has any entries or any other confluences for EU, wait, so let's see this. So this is a break and continuation. However, let's see if we can find if there are any red flags to this trade. So this is EU. And that's with a 15 pip stop loss and 30 pip TP. So the last part of our confluence is we check the zones indicator. So the zones indicator, EU bounced off of a demand zone. Yes, we're in a supply zone, but this supply zone is in between two demand zones. So to me, this is a risky trade. The reason also is the areas before you hit your TP are all demand zones. So this is either a trade, even though it's going to hit, even though it might hit TP, it's either going to range for the next 12 hours or you're going to get stopped out for this trade. So as much as it's a valid break and continuation entry, the zones indicator is telling us your trade is sitting on one, two, three demand zones and only one supply zone. So, and for the markups indicator as well, markups indicator, we really don't have any order blocks between your entry and your TP, but of course, red flag is the zone. So the road to your TP is filled with demand zones and you're looking to sell. So it's not even a trade. It's not a trade I would take. It's not a trade I would encourage anyone to take unless maybe you have your own other confluences out there. But that's the only other trade I can see right now. Nothing for gold. US 30, personally, I'll just wait in here. If I see the trade, I'll send it out in the Discord. Hopefully, the one from yesterday came too fast. The US 30 trade we were waiting for yesterday in those supply zones, like it came too fast. I think it was posts FOMC or before those earnings releases were announced. But just take a screenshot of this, just so where we have our all-time high, there's a higher high there. We have a 4 hour bearish high at 38,885, 887-ish. We have a strong supply zone between 38,923 and 38,894. And then from there on, right, do your probabilities, watch price action. Because normally when I step off the charts, I'll probably not trade today. Because for me, a trade has to make sense and I don't want to just be sitting on the charts just looking at everything. Other than that, I mean, we still have SAR zones down here, all the way down here. So all of these are potential trading zones that may line up for tomorrow. Now, the other thing to remember on Fridays, personally, I don't prefer trading on Fridays, but on Fridays, what um, you normally expect a continuation in the market. So whatever direction US 30 chooses today, we might continue in that direction through tomorrow. So if the drop does not happen today, we'll probably continue seeing a spike up for US 30 through tomorrow. And then maybe on Sunday or Monday, see a reversal to the downside. But Fridays, normally, since I don't prefer trading on Fridays, I normally look for my Friday trade on Thursday, like Thursday afternoonish, Thursday like 1 p.m. or 12 p.m. But just keep an eye out on this trade. At this point, you might as well move to the 15-minute time frame, because even on the 15-minute time frame, we are probably going to get that higher high created here. So I wish this was an SAR zone because we would have done a break and continuation entry. However, you can still do the same, but again, right, looking for this pattern to play out, I would rather take the sell within this supply zone other than just take it here. So my main concern is how big is this supply zone? And also how big is my take profit? I can do 100 pips take profit and maybe do 200 pips or 100 points. I'm sorry, 100 points stop loss and 200 points take profit. But then, maybe I'll be in that trade for like the next whatever hours. So I can definitely like do a US 30 sell here, but then for stop loss, I do 100 points and still risk the same amount, like 1% per trade. And my trade will look something like that. So that's another thing you can do. But for me, I would rather just stick to my 50-point stop loss and 100 points TP. So that's why I'm waiting for this here. Let's see, what time is it? I'll stick around for 10 more minutes till 10:45 Eastern time. And then after that, I'll just call it a day for the live session. So for me, no trades. So this is my 200K account right here. So I've only taken only one trade this week, the trade for Tuesday. So I haven't taken any trades. Yesterday, no trades today as well. Up 2% so far. So not trying to push anything or to force anything. And I need to get my win rate up because and again, right, when I normally tell you guys the power of having a positive risk to reward, so you can see our risk to reward is 1:2. I've had 9 losers this month of February and 6 winners. So as much as I have more losers than winners, I'm still positive for the month so far because of that 1:2 risk to reward and break even being set at 1:1. So this is another reason why probably you guys may not see me taking as many trades because I know I would rather not trade at all rather than just take a losing trade. And now especially now since we've included the zones indicator as an additional confluence, you can expect there not to be as many trades as we used to get because the zones indicator will now give us another confluence to check. So as much as an SAR zone might be valid, remember, if we are selling, we need to be selling in a supply zone. If we are buying, we need to be buying in a supply zone. We don't want SAR zones that validate in no man's land. By no man's land, I mean in between a supplied zone, in between a demand zone. So at that point, you're just, it's just a flip of a coin. You're just hoping the trade goes in your direction. So we want our trading or our entries to be a game of probabilities. If we don't get any probabilities for that day, that's fine. Because remember, we are risking 0.75% per trade, personally 1% per trade. So you can have somebody who trades every single day, and at the end of the week, they end up either in drawdown or they end up at break even. But for us, we can just have one winning trade, and that's 1.5%. 1.5% win on a 100K account, that's $1,500. On a 200K account, that's $3,000. So just getting that too with your trading psychology and knowing that the figures add up at the very end of the day, right? For example, if we go over this spreadsheet from last year, you can see when we first started doing the live trading in March, right? We had a nice win rate every single day. And here, this is when we were actually using the zones indicator. We were using supply and demand in conjunction with trend lines. And we had such a nice win rate in March. April, we had a 4% win rate. Again, we weren't trading every day. May, all of this. So we only had one losing month in 2023, and that was November for a loss of 2%. But every other month, December, we didn't trade. Every other month, October, 4.5%. The September, 2.6%. So I think I added this up. And if you had like 200K account and you took each and every one of these trades that we took, you would have been up 48K for the year. And keep in mind, when we started risking 0.25% per trade. Then we graduated and started doing 0.5% per trade. And now we are doing 0.75. So my personal goal was to get to a point where I was personally risking 1% per trade. So I've already gotten there. I would want you guys to get there as well. But the question is, if you lose two consecutive trades for that day, you'll be down 2%. Are you comfortable waiting till the next day? If you haven't gotten to that part of your trading journey, then there's no reason to continue or to even think of risking 1% per trade. So if you still struggle with over trading, over leveraging, yes, you can still risk 1% per trade and not take one trade or two trades a day. You can do that 1% per, I'm sorry, you can still risk 1%. I think for me, my overall risk, I cannot lose anything more than 2% in a day. So, but for me, the 2%, I divvy it up, I divide it into two trades. So I know maximum I'm taking two trades in a day. So I can still do my 2% overall for the day. And if I'm struggling with over trading or over leveraging, I can say, okay, I'm still going to do the 2% risk per trade. My average amount of trades is what? 10 trades a day. Then I would divide the 2% into those 10 trades. That means every single trade I will be risking 0.2%, I think. Yeah, 0.2% per trade. Yeah, zero, no, 0.2% per trade. And then you can start improving yourself. So you can tell yourself, okay, next week my goal is to now risk or to take at least 5 trades a day. Then you can still be risking the same 2% or even 1%, and then just divide that into your risk, and then you can see how many trades you're taking. And if at the end of the day you find that you're being more profitable taking one trade a day, or whenever the trade validates, or if you get a trade, if you're more profitable taking less trades over time, then just stick to that. There are people who are profitable taking even 15 trades a day, and if they choose to take 2 trades a day, they're not profitable. So just find that sweet balance, and then you know yourself, you know what kind of trader you are, and just align your risk management strategy to that. So unfortunately here, no trades for today. If I do see this US 31, because I still do anticipate them to come back in, I will send it out in the Discord. But for currently, we don't have any trades for today. So we just put an X on this. And I think there was one setup there on the 5-minute. If you took that 5-minute, because for me, this is the one I said was a little bit too low for me to take. If you took it, the trade came back to your entry or to break even, you would have started in drawdown, because remember, this is the trade I wanted us to take right here. But this confirmation candle closed a little bit too far down, and our stop loss would be not above the supply zone as we want. But if you did take it, so hopefully it goes straight into profit for you. But for me, I'm waiting for this setup to come back. So if you guys have any questions, feel free to ask. You can always ask in the Discord later on. But other than that, I will catch you guys tomorrow. Feel free to ping me in the Discord if you need anything. All right, bye.